Welcome to this deep dive. Today, we're unpacking the recent annual general meeting of Hong Kong exchanges and clearing HKEX.
That's right. We're going to try and pull out the key insights for you, get a real feel for where they stand and, where they're headed.
We've done the digging through the AGM details.
And right off the bat, the feeling from the meeting was, well, pretty positive. Lots of talk about achievements last year and confidence about the strategy going forward.
Okay, so let's jump straight into the results, the headline numbers. 2024 sounded like a really strong year for them.
Oh, absolutely. Management called it a record-setting period for trading activity, which, fed directly into what they termed exceptional financial results. Really underlines the strength of that core business.
And this was despite some wider market wobbles.
Exactly. They made a point of stressing the market stayed stable, robust, pointed to strong daily turnover figures, and a healthy pipeline for IPOs.
Which is always a good sign, right? Companies wanting to list.
Definitely. Suggests continued interest, good for future activity.
And has that momentum sort of rolled into this year?
It seems so. First quarter results for 2025, they showed some pretty impressive jumps compared to Q4 last year. Revenue up 32% and profit after tax jumped 37%.
Those are significant quarter-on-quarter increases.
They really are.
Yeah.
And for anyone focused on shareholder returns, they reiterated their dividend policy.
Ah, yes, the payout ratio. Still sticking to the usual.
Yep. Still committed to that 90% payout of profits. It's a long-standing thing for them and definitely something income-focused investors look at.
Okay, so solid numbers. Moving beyond that, what about the bigger picture? Strategic moves, future plans. There was a big announcement about property, wasn't there?
Yes, create Exchange Square. They've agreed to buy several floors there. For anyone who doesn't know, that's been the iconic home of the stock exchange for, well, decades.
So they're buying their home, essentially. What's the thinking?
Well, management framed it as much more than just a real estate deal. It's strategic. It's about securing a permanent base, supporting their needs as they evolve, maybe engaging better with stakeholders.
And maybe saving costs in the long run, owning versus renting.
Exactly. Long-term cost savings were mentioned. But also, it's a statement, isn't it? A big signal of confidence in Hong Kong's future as a financial hub. Quite timely, given some global chatter.
Makes sense. What else on the strategic front? I saw something about a big tech investment.
Ah, yes, upgrading the trading and transaction systems. We're talking around 1 billion Hong Kong dollars being invested there.
$1 billion, wow. What are they aiming for with that kind of spend?
The main goals seem to be efficiency, speed, making the platform more resilient, and a big one, aiming for 247 operational capability.
Aligning with global markets, basically.
Pretty much. Plus enhancing risk management tools.
Yeah.
In today's world, having a top-tier trading system is table stakes for a major exchange. It's crucial for staying competitive.
Okay. The AGM also had the formal business, the resolutions. All passed electronically, I gather.
Yes, all carried by poll vote. Standard stuff, mostly, like receiving the audited financials for 2024.
Any new faces or key appointments?
They elected a new director, Mr. Peter Whelm Herbert Bryan, and reappointed PwC as auditors, authorizing the board to sort out their fees.
Right. And weren't there also resolutions about the company's own shares, buybacks, and issuing new shares?
Correct. 2 general mandates. One gives directors power to buy back up to 10% of the company's shares.
Standard tool to potentially boost shareholder value.
Yep. And the second allows them to issue new shares, again, up to 10% of the current capital. But with a key condition, any discount on new shares can't be more than 10%.
So some protection against too much dilution for existing shareholders.
Exactly. Gives them flexibility for raising capital or strategic stuff down the line. Oh, and they also approved updated articles of association, just aligning the company rules with recent legal and listing rule changes. Housekeeping, essentially.
Now, you mentioned PwC's reappointment. I heard that wasn't entirely smooth sailing. A shareholder had a question.
That's right. A shareholder did raise a concern, specifically about potential impact on audit quality due to some team departures at PwC linked to a specific event, HDA, I believe it was mentioned.
And how did management handle that?
They stress that corporate governance is, a top priority. They actually announced they're starting a bidding process for the auditor role, but for the 2026 financial year.
So considering a change down the line, but not immediately.
Correct. They said changing auditors for 2025 just wasn't feasible given the scale and process involved. So PwC stays for now, but a review is happening for the future.
Interesting. What about dividends again? Beyond confirming the 90% payout, was there discussion about increasing it?
There was. Some shareholders floated the idea, maybe to attract certain types of investors like family offices.
No response.
Management pushed back a bit, emphasizing that 90% is already, well, quite high compared to global peers. The message is pretty clear. If you want bigger dividends, the company needs to make bigger profits first. It's directly linked.
Fair enough. Any other shareholder concerns raised?
Yes, one about potential dilution. A shareholder voiced concern about new share placements, especially if done at significant discounts, potentially hurting minority interests, and even hinting at possible share price manipulation concerns.
That sounds quite pointed. How did HKEX respond to that?
Management acknowledged the concern. They framed it in the context of HKEX's role as a regulator, not just an exchange operator. They essentially suggested the shareholder take those specific observations to the listing division staff, the people who actually monitor these kinds of market practices.
Okay, sort of redirecting the concern to the regulatory arm.
Seemed that way.
Yeah.
We also heard from a mainland investor, which is interesting in itself. They had two specific questions.
Oh, what were they?
First, questioning if the purchase price for the Exchange Square property was reasonable, comparing it maybe to Beijing CBD prices. And second, asking about letting Stock Connect investors attend the AGMs in person.
Right, Stock Connect the link, allowing mainland investors to trade Hong Kong stocks. How did they answer?
On the property price, they defended it again as strategic. A rare chance for a permanent HQ in a prime spot, really doubling down on the Hong Kong commitment.
And on AGM access for Stock Connect investors. That seems like a growing issue.
Management acknowledged it, said they've heard similar feedback before and would give it serious consideration. They're looking into ways to potentially include mainland investors more directly in future AGMs. Recognizes their growing importance, really.
That's a significant point to watch. What else came up? Anything on taxes?
Yes, a brief mention about the effective tax rate. Under new accounting standards, the profits tax rate for Q1 actually increased.
Oh, by how much?
Went up to around 16%, whereas previously it was closer to maybe 10%.
That's quite a bump. How do they plan to offset that?
The strategy seems to be focused on driving higher turnover, more trading activity, and also diversifying the business, finding other revenue streams to lessen the impact.
Makes sense. Any final points from the meeting discussions?
Just one more shareholder suggestion about hybrid AGMs, combining physical attendance with virtual access.
To allow broader participation.
Exactly. While still keeping that in-person element. Management said they still prefer physical meetings, generally, but they'd reconsider if circumstances required it, like, during a pandemic, and they'd take the suggestion on board.
Okay, quite a lot covered there. So let's try and distill this. What are the really key takeaways for someone trying to understand HKEX right now?
Well, first, the financials look solid. Core business is performing well with those record volumes. Second, they're making big long-term bets. The headquarters, the tech upgrade signaling commitment to Hong Kong.
Right, vision and investment.
Third, the discussions around dividends and shareholder rights, like the dilution concerns, give you insight into their governance and investor relations approach. Fourth, that point about potentially including Stock Connect investors more in AGMs, that really highlights the growing integration with the mainland market.
And
finally, that higher effective tax rate is just something to factor into the equation when you're looking at future profitability. It's a new headwind they need to manage.
Got it. Okay, time for our slightly different segment. This is not financial advice. Purely speculative, potentially outrageous trade ideas based on what we've heard. What have you got?
All right, buckle up. Given HKEX is pouring that $1 billion into its tech, aiming for 247 trading, what if you looked beyond the obvious tech suppliers? Consider this, purely hypothetically, a long position in a really obscure, maybe even microcap Hong Kong listed company, something with super low volume now, almost zero analyst coverage.
Okay, where's the connection?
The connection, however tenuous, is this. If HKEX succeeds in creating a truly seamless, round-the-clock market, could that potentially attract completely new types of trading interest, maybe more speculative flow, into names that are currently completely illiquid, especially during what are now off-peak hours?
So you're betting that 24/7 trading might randomly light a fire under some forgotten stock?
Kind of. It's a bet on a potential, maybe unintended, consequence of enhanced market accessibility driving activity into the market's dark corners. Highly speculative, extremely high risk, of course. Just a thought experiment, really, not a recommendation.
Definitely not financial advice. But it makes you think about the second and third order effects. Okay, wrapping this up then. This deep dive into the HKEX AGM shows a company in Pretty good shape financially.
Yeah, strong performance, definitely.
Making significant investments for its future, and also, listening and responding to shareholder concerns, even the tricky ones.
Absolutely. For you, the listener, the big themes are that fundamental business strength, the clear long-term bet on Hong Kong, and how they're navigating shareholder value and market access in this, well, increasingly connected world.
As always, we encourage you to do your own homework, look at the reports yourself. This was just our take. For informational purposes only, not advice. What stood out most to you? Any lingering questions about HKEX's path?
One final thought, maybe. Keep an eye on that integration with mainland investors. Not just trading flows, but potential influence in corporate governance over time. It's subtle, but could be quite significant down the road.